Back with India Market Open, and let's take stock of what could the near-term implications or medium-term implications be like for markets at large. Anish Damania, MD and CEO of JM Financial Institutional Securities, with us on the show for the first time on NDTV Profit. Anish, great having you. It's been a while. Thanks for taking the time out.
Well, thank you.
Anish, what's your sense? There's a bit of a climbing the wall of worry that the market has done in the recent past. As much calling was there for it being an overvalued market and correcting since mid-Feb. I think we've recovered very, very strongly in the last few days. What happens next?
Yeah, I think this has not been the first time. This has happened at least 4 or 5 times in the last 18 months. And every time there's an expectation that there will be significant corrections and the corrections will spill over into a longer time frame, and the market has recovered very quickly back thereafter. I think this is more to do with the liquidity flow which we have seen in the market. Nearly 2 lakh crores each from DII, FIIs, and 1 lakh crores from the PMS and AIS, etc. So about 5 lakh crores of inflows into the market. And if I look at the supply side, QIPs, IPOs, blocks together account for 3 to 3.25 lakh crores. So about 1.75 lakh crores have gone into the secondary market. So this is a lot of money for the market to absorb. No wonder, we have got a 28% return in the Nifty and a much higher return on the mid caps.
And so, Anish, one of the factors driving stocks, as is the case usually, is earnings growth. There is talk that FY25 earnings growth after 4 consecutive years of double digit may cool off a little bit relative to the trends seen. Could that be a factor coupled with all the other factors that are usually there, which may, for lack of a better word, temper the gains for FY25?
I think whenever we look at averages and whenever we combine the whole thing, sometimes it gives a little different picture. But when we take pockets, we have seen outperformances coming through. And the market has shifted from understanding a 1 or 2 year perspective to a 3 to 5 year perspective. And when we look at the 3 to 5 year perspective, lots of opportunities coming up for the Indian players, especially when you are seeing very marked, focus towards India by the global guys, both on the manufacturing side as well as on the fund side. So when we look at that, it opens up a lot of opportunities for the country. I think that is what the market is trying to price in a little bit. And this is just a start of that trend. Secondly, as savings have got channeled into investments, that is another flow of trend. That is another trend which we are seeing, which is expected to continue. So both these put together would mean that even if for a particular year earnings growth slows down, it might not impact the markets too much.
Okay. Anish, where are you guys bullish on currently then, with the construct that you may have in mind for the markets? Is it financials wherein there seems to be a consensus buy? I mean, we were looking at the Nifty 50 constituents. 4 of the top 5 stocks with the highest return potential as per the Bloomberg consensus are financials. So where is it they're most overweight on?
No, I think financials will continue to be a good area to invest in. When you are seeing significant size of money coming in and what needs to be deployed, financials is about 30% of the weight in the market. So that's where you would see. Obviously, there will be other names which will form part of the alpha, but financials definitely is going to be the key driver of the market. One of the reasons why I see this is probably it's a cleanest play on any growth that we see on the manufacturing side or on the capital goods side or the capex side, which happens. And this clearly is the cleanest way to play the India story. So financials will remain a very pretty important basket in any investment decision. And I would say that though it might be a consensus trade today, it will still continue to perform well.
Okay, fair call. What else, Anish?
So I think one of the key things which one has to look at is also if I were to see India, we have become very over the last 10 years. A lot of investments have gone into automation processes, etc., and that has made India an extremely lean country in terms of costs. So, be it men, be it material, be it energy costs, be it overhead costs in the factory, all of them, when I benchmark it against some of the global companies which are reporting margins the way they are, India stands out, and we probably score a lot over in these parameters. And given these parameters, and given the way automation has happened, the quality of the Indian products has significantly improved. So I think manufacturing as a sector will continue to benefit from this aspect. On top of it, we have a government which is extremely keen on promoting this sector in a very large way. They have first identified where all we are importing things, and accordingly, they are framing policies to make sure that we indigenize them. That itself is a very big opportunity for us. So I think manufacturing sector across the board is going to be extremely important in one of the baskets of investments. The other basket of investment, which has been a kind of a revelation, has been the PSUs. I think PSUs across the board have performed very well on the market, and I think that will continue. So financials, manufacturing sector, PSUs will all do very, very well. Uh, Consumer sector today is seeing some bit of headwinds, largely on the mass market side. We are not seeing a lot of growth. But if over the next 1 year we continue to see the way in which things are moving, I think the sector also should start doing well. So if you ask me where a contrarian investment could be, maybe it is time to have a closer look at the consumer sector.
Okay. And I'm just repeating for clarity, by consumer you mean staples. You're not talking about premium consumption, because that's had a really good run any which ways.
Yeah, so I'm talking about mass market,
Mass market.
mass market staples, and it could be even, to an extent, not premium, but you would say the mass market products in the durable space as well.
Got it. Some of the last question, some of the economy linked stocks are making a comeback after a brief hiatus. Like today, for example, the likes of Garden Reach Shipbuilders, Mazgon Dock, Cochin Shipyard, etc., are all really shooting through the roof. The last few days, we've seen some of the others also come back. Is the PSU fear ebbing? Are you guys constructive on PSUs? I know it's not. I know it'll be bottom up, but broadly, are you anti PSUs or are you for PSU companies as well?
So we are very much for PSUs. I think that has been one of our largest themes over the last 2 years. It's been a big contrarian theme, very difficult to push through the first year, but I think a lot of investors saw the merit in this, given that things are happening for them. And as I mentioned to you, the government focus has also been extremely good in terms of converting the import items into indigenization. PSUs also a large play in that, especially on the defense side. So from that perspective, I think PSUs as a theme and most stocks within the PSU basket will continue to do very well. We're still not seeing the end of this. I think we are at the midway somewhere, and so there's a long run to have in the PSU still.
Okay, Anish, we'll leave it at that. Thanks so much for taking the time out, and look forward to have you more often.
Thank you.
All right, that's a view from JM Financial. And on the note that the markets are okay, but specific pockets, like I said, some of the shipbuilders, etc., are doing well, with the markets being very flat. We wrap it up on this leg of India Market Open. Up next is the FNO Show.